The information contained in this podcast is not financial nor investment advice. All trades and investments are my own. All opinions are my own and should not be construed as advice. If you do decide to trade or invest in any of the markets discussed, you do so at your own risk.
Hey there, welcome to episode 19 of the Blockchain Immersive Podcast. Wow, it's been a while. I'm so sorry. It's been since October. I've been so busy. I made a major move from New York City out to a little bit more country setting. So it's been quite busy. But I haven't forgotten you, and I'm still trading like crazy and doing the same thing pretty much that I was doing before, but just from a different location. So I just wanted to touch base to tell you, sort of to update you on what's going on in the world. I'm sure you've seen some of the more dramatic issues that occurred. Now, you saw my video on FTX when it first fell, and obviously that drama is still unfolding, and more is coming to light. Now, in this podcast, I just want to mention why these events could actually be good. And I know that doesn't sound like that's possible, but I'll explain that in a moment. But today I just want to mention something about the Silicon Valley Bank debacle and the rate hikes that we've seen and the state of crypto. And if you've seen my other videos, I discussed that I thought that the raising of interest rates was a big mistake. And I'm on record saying that. And this is why, because first of all, when rates are raised, it's usually due to some type of systemic issue. We had here a situation with COVID and supply chain issues that the government said, well, instead of addressing it directly, let's just do what we've always done. Okay, and just raise interest rates. Now, the problem with rising interest rates is that it creates problems downstream. So we had this bank on Friday, Silicon Valley Bank, that a lot of companies had money in, including Etsy, by the way. Etsy is having withdrawal issues right now, or rather payment issues to the various artists because they had Silicon Valley Bank as their distributor. And I don't think they only had that bank, but that was one of them. So Silicon Valley Bank is where a lot of venture capitalist firms keep their money, a lot of people in tech. And so that collapsed on Friday. And they said it was marking probably one of the biggest, if not the biggest bank failure since 2008, when we had the collapse of pretty much the housing market and Wall Street. Now, everyone out there is saying the same thing. What precipitated this fall? The Federal Reserve's decision to increase interest rates and increasing it by such a high amount in just under a year. So what happened is that money was literally in the system, was rushing out of these banks and into the treasury market, which was actually yielding more than savings accounts and money market accounts at these banks. And you're seeing this across the board. This is not just Silicon Valley Bank. All these banks are under pressure right now. But Silicon Valley Bank just happened to be in a pretty bad situation, and so they had to sell off part of their loan portfolios at a loss and potentially raising more money through a stock offering to make good on these withdrawals. So then a huge bank run occurred, and then the government was like, all right, we're going to shut you down. And usually they wait until the end of the day to do this, but they did this right in midday, shut the bank down. Even the bank in New York, their branch in New York, had to call cops to make sure that the depositors didn't storm the gate, so to speak. So what does this show? It shows you the potential consequences of the Fed's aggressive interest rate hikes and how it impacts stable institutions that otherwise had no real risk of collapsing. Silicon Valley Bank was in very good shape prior to this. So as we saw also, as the interest rate hikes were increasing, what did it do to the cryptocurrency market? It collapsed, just like every other asset. Now, the problem with that is that there was a time where, and even I believed this at one point, that cryptocurrencies would be immune to inflation and to all of these things, but it becomes that it's not true. It became another asset class. But still, it is the direction that the world is going in, and I'll get into that in a moment. So we have obviously the pressure on the cryptocurrency markets and the pressure of higher interest rates across the board. Stocks too. Everyone is suffering from this. It just asinine, as I was saying, that they increase interest rates so horribly, so quickly, is just unbelievable. And what has transpired from that? The tech industry has experienced a double-digit decline over the same period. I mean, that's ridiculous, because when the government raises interest rates, it makes it harder to borrow money, not only for companies, but also for individuals as well. And things cost money, and because we also have inflation, so people are borrowing as well. Remember, credit card debt is higher than it's ever been for consumers, especially in the sort of the younger group, because there's inflation, and now that interest rates are higher, they're also paying more. So it's just like what they call a shit storm. That's what it is called. And we've seen ever since they started raising interest rates, everything has been coming down. All the tech, everything has been coming down. So all these financial institutions are really suffering because of this, because they can't keep up. This is not the only thing we have something to worry about. Remember, loans are now under pressure, because remember, when interest rates are higher, cost of borrowing is higher. So then we're starting to see across a lot of commercial real estate that there's a lot of pressure, because at least $60 billion are due to be refinanced at higher interest rates in the coming year or two. And this will be very, very tough. This will be very, very tough. And they're already seeing pressure in companies that invest in real estate. So this is really tough. And so we're seeing sort of this cascading effect. Now, will Silicon Valley Bank create a contagion like in 2008? I don't know. It's too early to say, but what I think is going to happen is that more attention is now going to be placed on these sort of smaller banks, and that could cause something. Because remember, a lot of what goes on Wall Street is perception. And I wrote, and I stated in my Psychology of Trading course that oftentimes perception creates the reality, even if the underlying reality is not as bad. Because you had banks during the 2008 credit crisis and mortgage crisis that were fine, but because there was a contagion in the market, people were pulling out money, this, and that, and all of a sudden they went under too. It could potentially turn into that, right? But of course, I don't know that for sure, and that's why I'm not going to say that that's actually going to happen. But it's a tough situation, because people are so spooked right now. Not only FTX, but all these other things that happened. The Luna coin, all of these debacles that happened in not only crypto but in other industries. People are scared, and I get it. Like, for example, when Silicon Valley Bank announced that it was essentially shuttered, people were dumping the more stable coins in the market, the more stable cryptocurrency coins. So you can see that people are panicking left and right, because they don't want to be in an FTX situation where they're literally holding the bag. So this is a very rough time for crypto and a rough time for the markets. But the thing is that the industry is still moving forward, and it's just what's happening. It's sort of a good thing and a bad thing, right? Because the governments want to put more regulation. Well, at least the United States government. Other governments are actually opening up their crypto investments. So it just goes to show you. But the United States, we're always very reactive here. You know what I mean? We're not proactive, we're reactive. So now it's literally a boomerang shot. So now they're like, all right, FTX fell. Now we have to clamp down severely. And this, of course, caused Binance to suspend dollar withdrawals. And that's a cascading. I mean, people who have money are at risk. There's no doubt about it. It's not a very stable time. But I want to look at the bigger picture here regarding crypto. Remember when Satoshi created the first Bitcoins? The whole purpose was to give the individual control over their money, right? Think about this. What happened to the crypto industry after that point? It became more and more centralized as opposed to decentralized. Now, again, a double-edged sword. I happen to be okay with some aspects of it being centralized, but look what has happened, though. What has happened when crypto became centralized? All of this bullshit, all of these collapse, all of these frauds. So what I think is going to happen as the governments start to crack down, I think there'll still be obviously centralized locations to buy and sell cryptos, like Coinbase. I mean, I don't see Coinbase going anywhere, but you never know, right? But I think what's going to happen, aside from these blockchain projects, I think that we might be going back to basics. Going back to Satoshi's original premise was each person takes full control of their own money instead of putting it inside of a centralized banking system. So it is possible that the crypto dream can come true. Now, right now we're in a very rough patch, but what has this taught you, any of us, is that yes, the centralized locations make it easier for us to buy and sell and trade. I certainly trade every day on KuCoin, on Coinbase. So, I understand the benefit of that. But at the same time, maybe what's happening is for us to now put our money in our own private wallets, our MetaMasks, our Phantom wallets, and trading them on more of a DeFi platform as opposed to a centralized platform, and bringing the power back to us again. Because, Coinbase can suspend your account at any time. These other exchanges can do so. For whatever reason, they'll have reasons. Of course, they're not going to just suspend it out of nowhere, but still, that's a lot of power that they have. Because when it's, there's that saying that someone said, if you don't own your keys, you don't own it. You don't own your crypto. So I think that after some time, we're going to shake off all of these horrible events. The cryptocurrency industry is going to regroup. A lot of coins will probably go by the wayside, more what they call quote unquote shit coins. And then we're going to start having a more mature conversation around it and bringing cryptocurrency sort of back to where it originally started from, which was giving people more control. Now, the governments aren't going to like that, right? So there's going to be probably a little pushback. But what you're witnessing here right now seems like chaos. But this is the burgeoning of an industry. And when new industry comes that shakes up things, both for good and for bad, you're going to have a lot of this stuff happen. These types of frauds that we've seen in cryptocurrency are like unprecedented because we don't have a structure in other markets that could allow for something like that to happen. So now that we know, and unfortunately people have lost a lot of money, but also at the same time, the industry is learning from these things. And so this industry looks like it's down for the count, but really, yeah, it got knocked out. But it's still in the ring, and it will get up. It's just how it's going to get up. What is it going to look like? Okay, but it's here because look, every government, is looking to create their own blockchain version of their own currency. It's going to happen. Okay. The industry, cryptocurrencies aren't going anywhere. Okay. They're just going to change form a little bit. And I think more people, as they become wiser, will start taking more control over their money instead of just being here, do this for me. No. And so obviously I mentioned that in my courses on how you can do your own thing. You don't have to use it, but using a centralized is a nice little platform. But otherwise, you can do a lot of things on your own. And I think that's important to note. And so although it's looking very bad right now, I still believe that there's room for growth in crypto. We just have to go through this hard patch. And as we've seen, not only in our own lives, right? We go through hard patches, and then more often than not, we come out the other side being like, wow, so much has happened, and and you've learned so much. And I really believe that this industry, there's just too much money in the industry for this industry to go away. Okay. There's too many people in it, too many high profile companies. So they're not going to all just unravel and the cryptocurrency industry is going to go away. It's not going to happen like that. Instead, it's going to evolve. And so just what I would do if I were you is just keep track of what's going on. If you aren't big into trading, maybe you put your tokens in a wallet somewhere that you have control over and just hold, right? And of course, I'm not a financial analyst. I'm not an advisor, but what I'm doing is that I have almost all my crypto assets, except for the stuff that I trade on KuCoin, as you've seen in my other videos. Everything is on the ledger, the cold wallet, and I put it there because just in case, the shit hits the fan and people think already it's hit the fan, but no, it could get worse, right? It could get worse. The government could say, no, you cannot have money in Coinbase. You know what I mean? So what are you going to do? You have to put it on something that you have control over. And the ledger is a perfect way to do it. Now, I don't sponsor the ledger. There are other ones. There's also Trezor. There's other ones there as well. But that's what I use personally, and I have that in a video in one of my courses. So yes, this is not a good time for crypto. It's not a good time for most of the financial markets. But again, this was something that I was talking about several months ago, that this interest rate rise, these increases are hurting the economy. They're not helping. Inflation tamped down just a little bit and certain things have improved, but it's not because of the interest rates. It's because it's just the normal market cycle. But the government, they have to save face. They have to show that they're doing something. Okay. And so all they do is the same shit that they do all the time. Let's throw the same solution to every fucking problem. And that's just not the way to do it. That's not the way to do it. It's as simple as that. And now we're seeing even more downstream effects with this bank failure right now. We're seeing it. And like I said, I don't know if there'll be a contagion now. There could be, there may not be, I don't know. But I will say that from FTX and all those, there was a contagion. So I'm just saying, this is why we need cryptocurrency more than ever, is to be able to take it back and to control it, So, but again, things are still evolving, and I'm still optimistic about the long-term future of it. And the trading opportunities are still there. If let's say you're not interested in the long term, you don't care what happens to cryptocurrencies, and you want to trade it like you would, let's say, a stock or a commodity or something, there's still many, many great opportunities, and I still trade it like that too. I have a couple of positions right now. Rather, I have a few positions. So that's it for this podcast. I just wanted to touch base. I know it's been a while. I'm trying to get more stuff out there. I have other content that I create too, so I'm looking to manage my time just a little bit better. But I did want to touch base, and I do hope you're well, and I hope that I gave you something to think about in this podcast. And I look forward to putting out more of these, and I will definitely speak to you soon.